The US dollar is poised to enter October with a gain of over 3%. Meanwhile, its competitors are losing ground largely due to the central bank's monetary policies. In particular, the euro is weakening in response to a series of interest rate cuts by the European Central Bank. In addition, the yen, which has weakened following Japan's parliamentary elections, could further bolster the US dollar index if the Bank of Japan decides to keep its interest rate unchanged at 0.25% on Thursday. Let's explore how the economic report scheduled for release on October 31 could affect the forex market. You're watching Traders Calendar. The European currency is facing increasing challenges against its American counterpart. While the US economy demonstrates remarkable resilience, the Eurozone's performance appears lackluster. In Germany, for example, retail sales growth is expected to slow to 1.6%. Given that the previous report showed a rise of 2.1%, the highest in over 2 years, this slowdown could weigh heavily on the euro. This blow could be somewhat soften its consumer price in the euro area pickup. In Italy and France, economists expect a 0.1% increase, while the overall annual inflation rate for the region is projected to rise from a 1.7 to 1.9%. In this case, the euro could gain value. If the weekly initial jobless claims report also shows an increase, the dollar may suffer losses. Considering that the US labor market data will be released at the end of this week, markets could react with a highlighted volatility towards essentially secondary data. Any downward deviation from the forecast of 230,000 could drive the greenback higher. It's also important to note that other significant US reports will be released simultaneously. For instance, the Personal Consumption Expenditures Price Index is an indicator that correlates with the retail sales data. Therefore, its rise is likely to support the national currency and vice versa. However, the report due out on October 31 is expected to show a decrease to 2.6%, potentially leading to a decline in the US dollar. The dollar slide could accelerate if consumer inflation in the United States declines as well. Forecasts suggest that inflation will slow to 2.1%. The core component, excluding food and energy prices, is expected to remain around 2.6 to 2.7%. Therefore, the US dollar's position could be considerably shaken. Please note that the UK and Europe switch to winter time on October 27, while the United States will make the change on the night on Sunday, November 3. Data release times are set in a GMT plus 3. So we wish you profitable trading and see you soon.